Welcome back to Future Finance Lab. I actually wasn't planning on recording anything today. But sometimes, when the market shows you something truly important, that's exactly when you have to hit the record button. The best insights don't come from a schedule. They come from pure observation. And right now, something fascinating is happening in the metals market, especially with silver. If you've been following the channel, you know I've been bullish on silver ever since it broke out above that major resistance level around $29. That breakout wasn't just a random move. It was a structural shift, signaling long-term strength. Since then, silver has moved significantly in our favor. But markets never move in a straight line forever. After a strong, almost parabolic run, a correction becomes necessary. This doesn't always mean a price crash. Sometimes it's a time-based correction where the market just pauses, consolidates, and builds energy for its next big move. And that's exactly what silver has been doing. Now silver is approaching a very critical zone. This resistance area is extremely important. If silver manages to break above this level, and more importantly, close above it convincingly, I am talking one or two strong daily or weekly closes, then we could be getting ready for the next major expansion phase. When assets break long-term resistance, they often enter a phase called price discovery. That's where momentum really starts to accelerate. Could silver revisit its previous all-time highs? Absolutely, that's very possible. Could it go much higher in the coming years? Also possible. But the most important thing to understand is this: timing the exact move is incredibly difficult. That's why on this channel, I always emphasize one simple strategy, SIP, or systematic investing. SIP removes emotional decision-making from the equation. You don't need to predict the exact top or bottom. You just build your position consistently over time. Then, when the big move finally comes, you're already positioned to benefit. Now let's compare this with gold. Gold has already shown relative strength. It broke above its key resistance levels earlier than silver did. This tells us something very important. The precious metal cycle is active and alive. But historically, silver tends to move later, and when it finally moves, it often moves much faster. This brings us to another key indicator, the gold-to-silver ratio. When this ratio declines, it means silver is outperforming gold. And recently, this ratio has been trending downward, suggesting silver may be entering a period of relative outperformance. Again, this isn't about short-term predictions. This is a long-term structural signal. Let's briefly touch on copper. Copper is a different beast entirely. It's far more sensitive to economic cycles, industrial demand, and global growth. Unlike precious metals, copper doesn't always trend cleanly. It moves in volatile cycles. That's why, for long-term stability, gold and silver remain a simpler and more reliable choice for many investors. Shifting our focus to equities, emerging markets are showing a lot of strength lately. One of the main reasons for this is the weakness in the US dollar index. When the dollar weakens, capital tends to flow into emerging markets, which supports their stocks, commodities, and other risk assets. However, the market isn't just in a straight-up bull run. Instead, we're seeing something called sector rotation, and this is crucial to understand. Money isn't leaving the market entirely. It's just moving from weaker sectors to stronger ones. The strong sectors keep attracting capital while the weak ones lose momentum. Successful investors don't fight this flow, they follow it. Instead of holding everything blindly, they gradually shift their exposure toward the sectors that are showing strength. This is how you compound capital more efficiently. But at the same time, true long-term wealth isn't built by constant trading. It's built through the disciplined accumulation of strong assets over time. That's why, from a long-term perspective, precious metals like gold and silver remain so important. Not for short-term speculation, but because of long-term monetary cycles, inflation dynamics, and global liquidity trends. We are living in a world where debt levels are soaring. Currencies are constantly being diluted, and financial systems are getting more and more complex. In this kind of environment, hard assets have historically performed very well. But again, the key is discipline. No panic buying, no panic selling. Just consistency. Because in the markets, survival comes first, and growth comes second. If you can stay invested, stay disciplined, and stay patient, time will do most of the heavy lifting for you. This is exactly what we focus on here at Future Finance Lab, understanding trends early, positioning intelligently, and building wealth step by step. If you found this analysis useful, make sure you stay connected. Because whenever the market shows us something important, we'll be here to break it down. Thanks for watching, and I'll see you in the next update.